have with us the management of Tata Steel. They're the only Indian company named in Fortune magazine's World's Most Admired Companies for 2011. Sir, how does it really feel and really what goes into making such a company? What's the scope of improvement?
We are actually very pleased that we have been conferred this honor, and this is the second consecutive year when we are there. And the methodology, as explained in that award, is it's not the award for which we apply or Hayes or Fortune magazine doesn't write anything. It's your industry peers of repute who are consulted and they decide. So to that extent, there is a neutrality in deciding. The parameters are typically technology, continuous improvement, people development, and business results, of course.
Sure, sir. I want to come to the recent sort of news point on the stake sale in Riversdale now. So, what really was the rationale behind exiting your 26% stake, and will this not, in some sense, jeopardize the raw material availability for European operations?
No, the raw material availability was in the downstream company, which is the Benga project, where we are there, and our offtake rights remain. So that's not getting affected or compromised in any manner. So far as the main company is concerned, yes, it was getting delisted, and I have press release said at that time there was no point in staying in a delisted company.
Would you have any sort of advantage when it comes to pricing in terms of the Benga project, or would you be left open to the vagaries of pricing as far as that is concerned as well?
No, but always the pricing will be a market price. It was offtake right. And whatever benefit or whatever profits you make in that company, since you are a shareholder and you have a percentage, you will get that as a part of that.
Okay. And when is production from there likely to commence?
I think end of 2012 is what we are, 2012, right? 2011, sorry. 2011 is what was expected, but then last 3 months it's only the other activities which are going on, so then we need to concentrate and review this project with the promoters again.
So what's the kind of capacity that you expect in the first 1 or 2 years?
I think for coking coal we expect something around 1 million ton.
Okay, that would be good.
Yes.
Koushik, coming to you, what are the proceeds of this going to be utilized for? It's $1.06 billion where the finance guy. So.
Yeah, I guess I've said this earlier also that if for a company like Tata Steel, which has got significant capital deployment plans and managing its capital structure as one of its financing priorities, this all adds up to the capital required, and we're just now sitting with significant liquidity, which is almost about $3 billion, and therefore as we go on in our projects, in steel projects in India, as we look at deploying the capital for our mining portfolio, where we are already invested in, including Mozambique, we would be using all of that and part of it possibly for capital structure. So it's very difficult to actually pinpoint which source is going to which deployment, and therefore I would more state that it's the board's discretion to allocate capital to a place where it's best utilized.
Okay, now what does this do to your sort of debt gearing, debt to equity ratio, because it's a significant amount? I mean, where do you see yourself with this money having come in the next year or so?
Well, our long-term capital structure targets are in the zone of 1:1 debt equity, and the net debt to EBITDA at about just shade over 1, maybe 1.25. It's the debt equity at about 1 to 1.25, and the net debt to EBITDA more at about 2.5. It's that boundary that we want to maintain going forward. Based on March 11, we have closed the gap. This kind of capital release will also help it better, and fundamentally with increased capacity in India and better performance in the next few years from Europe post the restructuring and the repositioning of the business, I think we would be on course to come to that kind of capital structure targets.
Sure, but last year was, if you look at Tata Steel last year, it was all about, raising money. It was, it was all, basically you raise money through the FPO, through the bond issue and so on. This year, what are the plans as far as that is concerned? Because you still need a lot of money for your expansion in Orissa and in Jamshedpur as well.
Yes, this being a capital raising of very significant quantum, which also puts us in a better position as a company to then plan and push forward the growth trajectory going forward. And it gives more certainty from a financial capability, appetite, capital structure point of view. And I think given that we have a very attractive project underway in Jamshedpur and potentially a very attractive project in Orissa, a large part of this capital will be deployed towards these kind of projects, apart from, as I said, maintaining the capital structure where we target to.
The way the interest rates are going and the environment, would you be looking at sort of raising more capital this year, or is that going to slow down significantly?
Actually, with the kind of liquidity that we have and the kind of capital structure that we are sitting on, the need for any big bang capital raising is not there. We, from a term perspective or a deployment perspective, we also look at the market. The market, yes, the interest rates are going up and the cost of capital from a secular basis will be going up given where the capital requirements are from a bank's perspective or the capital markets perspective. Volatility is high. So, as I said, we will not be looking immediately for anything big bang. Our focus is more on generating operating cash from all across our businesses, and that should be the, end of the day, that's the biggest fulcrum on which our enterprise performs, not necessarily the financing part.